What if there was a way to really understand all the different opinions from all the different financial experts out there based on all their different agendas and figure out how to buy products that sit and fit with your core values so your money time freedom could be in the proper place and you live the life of fulfillment? Well, today we're going to specifically talk about the 5 lies about life insurance and how to put you in the proper frame so you ask the right questions. So folks, my name is Rob Gill, founder, CEO of Epic Financial Strategies, and I want to thank you so much for tuning into this channel. My outcome at all times is to provide education so you understand all of the myths and the truths about financial products that are out there today. So let's get into some definitions. We're going to talk about term insurance first. The term life insurance is deeply misunderstood. The idea of it is boring and morbid. The way life insurance is presented to the masses is complete and utter garbage. How is an industry worth trillions so miserably bad at marketing its own products, or are they? There are 5 lies about life insurance that you need to understand before you're able to take advantage of the best kept secret in financial strategizing, and I'm talking about Swiss Army knife mindset, folks. Stay tuned. Number 1, life insurance is only useful after you die. Life insurance is not just about dying, it's about living with fewer limits. While it can offer a benefit to loved ones when you pass on, it can also be a financial asset during your life. Very simple, folks, and this is where, if you watch more of my videos, we talk about how in life you could use your life insurance as a turbocharger by spending it on other assets. When you pass on, you've enjoyed those assets while you're alive, and then the death benefit goes to your loved ones. Stay tuned, more to come, but that's just a little bit of a nugget that we're talking about there so you have an understanding of why we say what we say. Number 2, my company's got me covered. And by the way, I hear this a lot, folks. A lot of times people don't realize that you're only covered while you work there. While company insurance policies can be alluring, if you leave the company either by your own volition or by getting cut, that coverage vanishes. According to fastcompany.com, 65% of business leaders have said they had layoffs in 2023, and 25% of them have said they laid off nearly a third of their workforce. So understand that you're not covered once you leave, and it's important that you really I-dot and T-cross so you're clear on what your coverage actually looks like. And then you want to measure it from a death benefit perspective based on your income as well. That's a whole nother conversation, but I think it's important for you to understand what your worth is. Number 3, I'm too young for life insurance. That is not true, folks. I'll tell you right now, I wish I was 20 again, knowing what I now know, and we've all heard that before. If I'm 20 years old all over again, there's so many different things I would do different when it comes to money time freedom. So even though the likelihood of death or illness decreases the younger you are, health risks should not be your only consideration. Time is your most important, valuable resource, and if you don't use it to invest in a high-yield policy, you'll miss out on a growth opportunity. Here it is, folks. You get to overfund policies early and often, and now all of a sudden, time is on your side, 20s, 30s, 40s, 50s, and eventually get into retirement. By using this the right way and having the knowledge of investing in the real estate between your ears, all you young folks in your 20s, early 30s right now can really take a quantum leap forward by understanding leverage, liquidity, and control through your high dividend paying cash value life insurance. Number 4, it's too expensive. That's what they say. They say that. They say buy term and invest the difference. You ever say, okay, if I buy term and invest the difference, what's the difference going to earn each year? Is that going to earn that no matter what? Is it a guarantee? Does it factor in that rate of return, taxes, lost opportunity costs, and everything else? The answer is no. So when you do term and invest the difference, just know your term insurance will expire at some point. Then it becomes very expensive to keep term insurance. So if you execute it correctly, a life insurance policy will pay for itself. And I'm not talking about term insurance. By allowing your money to grow and then accessing it tax-free to invest in other ways, the potential growth may outpace the premium. Additionally, the younger someone begins a whole life insurance policy, the cheaper the policy will be. So remember, whenever you borrow from the policy, it's not a tax consequence. And remember, when you take income out later on from the policy, up to basis, it's not a tax consequence. If you want to learn more about that, stay tuned to the end. You'll have an opportunity to sit down with one of the folks here at Epic that could give you that education that you deserve. Number 5, it's too complicated. Yes, it is, especially if you're talking to the wrong person. Remember what I said. You may watch a video that looks just like mine, says exactly what I say, but when you click in, you don't know what's behind that curtain, if they're even giving you the right policy. That's why questions, the right questions, are the most important thing you could do, because it's up to the insurance agent or their team to understand your core values first, not just jam a product down your throat. So, using a life insurance policy to become your own bank is a complex process with multiple factors. However, it doesn't have to be difficult. Working with a qualified professional can provide maximum returns without the stress of needing to learn the ins and the outs of life insurance. You can stand on our shoulders and I'll make the mistakes. And I'm telling you right now, the way we present it to you and show you exactly how to do this, 90% of insurance agents don't like, because it takes money out of their pocket and it puts money back in your pocket where it belongs. So it's important for you to I.T cross and get all your financial educators on the same page. And there's platforms and tools that can measure that. So your decision making is not emotional timidity or a gut level hunch. It's based on logic, math, and science. So if you're new to the channel for the first time, I want to thank you so much. Go ahead, click the link below. One of the team members here at Epic is going to take you through our success process with no obligation, but let me show you what that looks like. It's a 6-call process over about 6 or 7 weeks where you learn how to build your own financial strategy through life insurance and creating multiple use of each and every dollar. Call 1's about getting to know you, your goals and objectives, what your outcome is, up to call 3, 4, 5, which is building out your own personal financial website, getting the right medical done that sits and fits with the right insurance company that could create the bank that you're looking for, getting you approved while understanding all of your different assets and your strategies, and ultimately presenting to you a final package that you get to say yes or no on based on what it looks like after these 5 or 6 calls, after these 6 weeks. So I want to thank you. Continue to follow, subscribe, like, and don't forget to share.